Hello, a very warm welcome to all our financial news, private equity news, and Dow Jones wide audiences. Welcome to the second installment of a four-part series on the future of exchanges, exploring the changing roles of trading venues in various geographical areas. This series is being brought to you by FN Custom Studios in partnership with SIX. My name is Mei Chang, and I'm a Senior Vice President at Dow Jones, overseeing the Barron's Group suite of publications, which includes financial news and private equity news. It's been well known that the future of finance and everything operating within it is going to be digital, from trading to custody, savings accounts to retail transactions. It appears that perhaps cash, at least in its material form, may no longer be king. But the path to this digital future is not completely clear. Around the world, regulators are grappling with the new digital future, with some making greater strides than others. In both North America and Europe, national governments and regulators are assessing how they can tame and employ digital currency, assets, and the systems needed to streamline finance more generally. These regions' largest banks are also seeing how they might take a leading role in creating and sustaining this digital future. So earlier this year, in partnership with SIX, we had a dynamic discussion in the series of four looking at the future of exchanges in Europe. However, today we turn to Asia to see how some of the regions, and of course, indeed the world's largest financial centers, are pivoting to embrace this digital future. Our panel today will explore the role of regulators, capital markets, and trading on Asia's financial digital ecosystem. We'll talk about the evolution of exchanges, as well as the safeguarding and transferring of digital assets. Today, we'll get a glimpse from our experts about where they think the first major transformations will come from and what will be that catalyst. So today, to provide us with insights, please join me in welcoming our distinguished speakers. The first is Irfan Ahmad, who's Vice President and APAC Lead for State Street Digital, a division dedicated to creating products and services centered around the central bank digital currencies and blockchain. We also have Lee Ben Hong, Senior Managing Director and Head of Fixed Income Currencies and Commodities at Singapore Exchange. And we also have here with us today Thomas Zeeb, Head of Exchanges at SIX Group. Thank you, Irfan, Ben Hong, and Thomas, for allotting this next hour for what will undoubtedly be an illuminating conversation. Hello. So let's just jump right in because we have so much to cover. Irfan, I wonder if I could start with you. Would you please provide a general overview of how Asia as a whole has embraced digital assets and technology? What are some of the countries leading in change, what they're doing, and what's been their catalyst?
Yes, absolutely. And thank you very much for including me on this wonderful panel. And good morning, good afternoon, and good evening, wherever you might be. So in terms of Asia Pacific, the observations that we have made at State Street is that there's been a lot of activity, both on the regulatory, policy, and institutional side of things, in terms of the way in which certain jurisdictions have progressed their thoughts around how to handle or license or provide some guidance around digital assets in the main. Interestingly, it's not really been something that the other regions have been able to progress as quickly. From the things that we note, there have been jurisdictions inside of Asia Pacific which have tried to embed digital assets into existing frameworks from a regulatory perspective, and therefore issue licensing regimes that are akin to what already exists inside of financial services. So that's something that we've seen as a demonstrative progressive step that Asia Pacific markets have really had in terms of outlining to the rest of the world how they're approaching digital assets. That said, there are, Asia Pacific is a diverse region, and therefore there are many different ways in which some regulators are actually approaching this space. Take, for instance, Thailand. We've noted that Thailand have actually come up with their digital asset decree, in which they've stood up separate policies, regulations, and legislations that look at putting some frameworks around digital assets as a whole. And this is in almost a contrarian way in which Singapore and Japan have kind of looked at putting frameworks in place around this. Most notably, the Payment Services Act in both of those nations have looked to build upon what have been already existing frameworks and regulation, and look to include digital assets and the nomenclature that actually sits around that into their progressive frameworks. So relative to, I'd say, Europe and North America and taking a broad brush, we can see that Asia Pacific has been a leader around digital assets, and so it's helped to kind of clarify the space for other jurisdictions as to how they might approach this this burgeoning digital asset class, and how we as institutional players will kind of look to address some of the fundamental issues and clarifications that are required in order to be able to really bring it into the forefront and the mainstream.
Thomas, I also would love to get your take on it, because you also have a very global perspective on it in your position at Six Group. But before I turn over to you, I just want to invite our audiences to drop in questions for our panelists throughout this discussion. We'll get to as many as we can throughout the conversation, and also in the dedicated Q&A session later in the program. Thomas, what is your take about Asia in comparison to other regions around the world?
I think Irfan said it very well. The various regulators in Asia, albeit at different speeds and potentially with different models, have embraced digital assets quite clearly and much more actively than we've seen in Europe or in the United States. Certainly from the point of view of having a consistent approach, at least within the countries. But that only covers part of the issue. And I think one of the areas where we as service providers and as an infrastructure provider, where we are still struggling to see where the delivery value proposition is going to be, is not the digital asset per se, but the technology underpinning it in terms of, are we going with still a centralized structure or a distributed ledger structure? That is a different regulatory challenge, and that is by no means yet clear. And then the second issue is, how do we deal with institutional versus retail markets? And what has worked well, in particular in the crypto space in retail, is now coming under pressure, significant regulatory pressure for all the right reasons. Those models don't tend to be appropriate for the institutional market. And part of what our challenge now is to define that value proposition and really define where is that hybrid between traditional roles of custodians and central depositories or registry depositories, if you will, because it probably won't be entirely centralized the way it is in traditional markets. But how do we ensure that there is, for instance, a separation between trading activities and the custody? That currently is not in place, not in a structural way that would make an investor comfortable that I can work with State Street, or I can work with another custodian, or I can work with a CSD and still do my trading in the most liquid environment with the best possibilities of execution. So there are still a whole series of open issues, and we also need to make sure that we're actually solving for a problem that we can define. Right? And that value proposition is partially the types of assets that can be tokenized, but it's also the flexibility once you get into the post-trade space, how we can reduce costs quite substantially. But as soon as you start drilling down into those process flows, it gets a lot of questions get raised, and those are not answered as yet. So, I think as an industry, we still have work to do together between infrastructures and custodians and market participants to define that value proposition and a way forward that institutional investors are going to be comfortable with.
Yeah. You've certainly raised a whole bunch of issues. I feel like we could spend the whole day trying to unpack. I would like to delve a little bit into some of those areas that you raised because it's so unclear and sticky. But I also do want to give Ben Hung an opportunity to weigh in on his overall assessment of how the Asia region is progressing.
Yeah, good morning, good afternoon. Great to be on the panel. It's definitely an exciting topic for us around the world, and especially in Asia. It's a great intro from Irfan and also Thomas. Really, I think we have seen a fair bit of development. I think you can see the different regulators around the region all trying to look at the relevant regulatory and legal infrastructure. Thomas mentioned that it's not only a challenge around technology, and as all of us within the exchange world know, we work with our partners to really look at how we can improve and the efficiency and safety and reliability of service that we provide to our client. I think a major trend that we have seen is really in the last 12, 18 months, I think an acceleration in the different POCs, new startup, that really looks at how we can better apply the technology, to better serve the clients that we are working with. And if you look at around the regions in Asia, I think there's application using blockchain on equities. You see it in Australia and Hong Kong. You have applications around trade finance. We actually have at least 2 startups in Singapore that really looks at how we can improve the efficiency of the trade finance world using blockchain. And on the fixed income side, again, different countries have done their POC across the Philippines, across Thailand, and recently there was an announcement in Malaysia, and within Singapore also. I think we have been working with our partners to really look at how we can better improve the process. So I would say that I think we are at the exciting, pivotal moment where I think we have technology with promise, we have regulators that's helping, and we are starting to see more industry players coming forward, working with us in partnership to really look at how we can improve the infrastructure together as a community.
Yeah, I think you're absolutely right. These last 12 months has been just so much movement, so exciting, despite the fact that we've been in a pandemic, a global pandemic, and for a while it seemed like many economies were just kind of in a holding pattern. Thomas, I wanted to come back to you and dive a little bit more specifically in the region. In China, we have the digital RMB tested, I believe, since the spring. But as the largest economy in Asia, what is China's role in advancing a digital ecosystem?
I think given the size and the number of clients who have embraced digital assets in the Chinese market, and I mean, obviously, we're all aware of the most recent crackdowns on what Chinese citizens are allowed to do. The role of China is a very, very clear role of what we could be expecting down the road. Where is there a consistent approach to analyzing where there are risks and where regulators quite rightly have to think about investor protection? And what are and it sort of highlights where are the challenges between fiat currencies and digital currencies, and sort of a black market around the existing currency flows that virtually all countries would not support, because of course the implications for the real economy are devastating if you have a parallel economy setting up in a digital environment that is completely untracked, uncontrolled, unseen, and therefore unregulated. And so China has taken a very clear approach to trying to get that under control. And I think that is something we're going to see in more markets. Because when we start drilling down into the business models of some of the current retail providers, those would not bear scrutiny in the institutional market in any way. And it's very interesting that pressure is now coming, because that gives us an opportunity as let's call it legitimate regulated market players to try and define what that hybrid will be that brings us into a transition from the traditional structures and markets we have into all the benefits and opportunities we have in the digital space. But you cannot go from yesterday to the day after tomorrow in one step. It is just not feasible and certainly not desirable if you're looking at this from the point of view of an insurance company or a pension fund or a big asset manager. There are assets that are of interest here, clearly of interest, and we've got people banging on our door regularly. Can we issue new securities on your exchange? The interest is there from the issuer side, the interest is there from the investor side. What's missing is how do we ensure that same degree of integrity that markets have become accustomed to in the structures we have? And that we don't have yet. We have parts of it, but it doesn't hang yet together, right?
Yeah. Obviously, nothing with China seems straightforward. So a lot of the actions of the regulators are very nuanced. And so I'm curious, Irfan, to get your take on what you perceive the government and regulators here are doing and how that's paving a path to their digital future.
Yeah, I don't think it's a particularly easy question to answer, and part of this might involve me bringing out my crystal ball and trying to predict the future, which not always ends with a correct prediction. But in terms of what we've been able to see ostensibly is China taking a front step towards digitizing their financial market infrastructures and being able to benefit from the underlying technology in terms of being able to scale it to a industry or a more workable level, integrating it into their current RTGS systems in terms of bridging that gap between old and new, and then being able to demonstrate at scale that they are able to deal with tens of thousands of transactions on a hybrid model. So the BIS, Bank of International Settlements, have issued a number of different papers on architectural design in terms of central bank digital currencies. And I'd say that China have really been a poster child in terms of one of those architectural design choices. But that said, there are many others that are being tested out at the moment. And the great thing about this space is that this really breeds innovation that really captures the imagination. And so if we look at China as a whole, what they've tended to do is leap technological phenomena in huge bounds. And so the idea of them moving into a completely digitally native currency isn't so far-fetched. And it might also lend itself in terms of them playing a larger role in international markets, as they might have ambitions to potentially internationalize their currency and in having a ERMB. So we've seen this most recently in terms of some of the MCBDC bridge projects, which is looking at bringing together central banks and experimenting around cross-border activity between their respective digital currency projects. So again, I would suggest that China is a very progressed state in terms of their own experiment, but it is currently still an experiment. Whereas if you look at smaller economies who are potentially a little less encumbered by the large part that they play in economics on a world scale, they may be able to progress slightly more quickly in reaping the benefits or the perceived benefits of having a digitally native central bank digital currency.
Irfan makes a really good point. We're working very, very closely with the Swiss National Bank and the BIS on the various reports that have been issued. And I think the use case for a trade finance solution is fairly clear. Mm-hmm. The use case for using CBDC for central bank money settlement of securities transactions is very clear. The use case in the straight payments world is somewhat less clear, because fiat currencies today are moved electronically, and it's all wrapped up in where are the benefits and the costs associated with instant payments and so on and so forth, right? And I think all of that is kind of converging, and that use case is not quite as clear. So all of the central banks that we're aware of, the major ones, are all looking at this, looking at also the approach that China has taken as one model, and are keen to see how that develops going forward. Because while, as I say, there are some clear use cases that make sense, other ones that it's not quite as obvious. And I think there are opportunities. My personal view is there are significant opportunities to replace RTGS systems and so on with CBDC. But then you're really digging into the plumbing of core cash flows within a country and into the international environment that still requires quite a bit of work and analysis to figure out what's the real benefit going to be at the end of all of that.
So perhaps a more straightforward case study. Let me turn to you, Ben Hong. As a key financial center in Asia, what has been Singapore's approach?
Yeah, I would say that I will describe a bit about what is happening in Singapore, but equally you'll see very similar in other major hubs. But really in Singapore, I think MAS has been a major facilitator in the process. Irfan mentioned earlier around the regulatory framework that sets the foundation. They refreshed the Payment Service Act in 2019. They came out with the Digital Token Guideline in 2020. And also, I think they set out a regulatory framework around sandbox for digital assets, fintechs that are really implementing digital asset solution, right, to the market. So with that in mind, I think as a foundation, I think the other major contribution or evolution has been the Project Ubin, which is a small island in the south of Singapore. We have been through MAS and the broader community. I think something that was very helpful is that we are able to bring together the regulators, technology providers, operator, together, into really different POCs to really look at different parts of digital asset and settlement around how the ecosystem can collectively come together to decide on how we can collectively apply the technology. So Ubin 1, 2, 3, 4. And we have done the fifth one after the fifth year. And really, I think on the back of that, it has really spawned, a whole set of, companies and services, right, that's based in Singapore. So, for example, in SGX, we form a digital asset venture with Temasek. The SIX Exchange, right, is coming to, there was an announcement that you're coming to Singapore. We have, two trade finance startup, that really looks at how to apply it around the trade finance world. So I would say that, in Singapore, you have, I think, the regulatory infrastructure that continues to evolve. You have the community all coming together really to explore what are the different bolts and nuts of how to piece together potentially a new and better infrastructure that can all improve the efficiency. And also, I think there is, fundings and new JVs and startup and services that's now being offered.
Yeah. Since Ben Hong, you opened the door for that, I don't know, Thomas, if you want to take a moment to talk about what your group is doing in Singapore that was announced.
Yeah, we're establishing a joint venture together with SBI and to provide a digital exchange and custody setup in Singapore for the region. And one of the goals of doing that is to leverage what we've done in Switzerland in terms of building SDX, and then linking them so that we get to a liquidity pool across both regions. for digital assets. And I think that, and we expect to widen that out to other areas as well. So I mean, it's by no means a closed loop, if you will. I think one of the interesting discussions, and we talked about this, I think, in the last panel for Europe. One of the interesting discussions is going to be, what is the role of a national exchange group in the future, where you have global digital assets and a global liquidity pool across them, and it doesn't matter which entry point you use to trade, you can settle and get access to that pool. And this is the first step that we would like to do between our digital exchange in Singapore, bring in more partners into that, and then link that to what we've already got in place in Switzerland. So it's the start of a network. And again, we're like everyone else, we're feeling our way through in terms of defining that value proposition for clients to ensure that there is an institutional grade solution that gives market participants like the large banks, like the custodians, options that they're comfortable with, given the structure and given where we're coming from. That will undoubtedly evolve over the next 10 years, right? I mean, it's going to evolve massively. But I think just putting the vision out there and being evangelical about it doesn't help us in terms of, so how do we get there? And these are I think the first steps in a new infrastructure that is going to be very, very interesting at a global level across all of the major financial markets.
Great. You absolutely bring up an interesting question about what the different roles of sectors such as exchanges are in advancing this digital future. I do want to go to that, but before that, I do want to just consider a moment about the impact of the pandemic on some of these countries, particularly in the Southeast Asia area. And I was curious to know if digital adoption was sped up as a result of that. I read about how, the advancements that different countries are making. Korea, I believe, was going to also pilot TESA, CBDC. And then, of course, even pre-pandemic, the Indian government had been pushing for digital adoption for, I don't know, some 5 years now or so. Thomas, you had spoken a little bit about the different pacing of countries. Irfan, I'm curious to get your take about if whether you think that there will be different tiers of approach, and if there's other economies that you feel is really worth highlighting in Asia.
Yeah, that's a good point. And maybe if I build upon something that Thomas and both Beng Hong had also noted, Asia Pacific as a region is a very innovative region. And in terms of the adoption that they've had around PayTech, say, for instance, there are certain jurisdictions which have been quite far ahead. And in terms of where they are in their journeys around utilization of innovative technologies for payment services, it's quite far along. So take, for instance, if you look at the Japanese economy, they have been using QR codes for a number of years. And I think the same might be true for a lot of North Asian countries. And so this is effectively been a push on an open door. So the progress was already apparent pre-pandemic, and what this has seemingly done is supercharged the approach in terms of really endeavoring around how this might be part of the status quo in the future. So if we look at, it was mentioned a little earlier, Project Ubin. At its very outset, it was designed to be not experimental, but the foundations for a commercial platform in terms of central bank digital currency. And so you can see, just as a test case, that Singapore has been very progressive in terms of their mindset towards the way in which they want to progress down this route. And it's not seemingly throwaway work that central banks like Singapore have been doing. It's been constructive in terms of the foundation that they want to try and develop that will house the next era of payment technology, and coupled with that, having a pragmatic central bank and regulator that really thinks about how they want to really provide the appropriate conditions to allow innovation to thrive has been very good. I mean, you made note that there has been a regulatory sandbox, Beng Hong, in which some of these these innovative firms have started out their lives, but they've also been ordained with things like capital market services licenses, which have moved them beyond the experimental stage and moved them into a real active role within the financial services community. And so I think things like that have been really helpful in terms of moving the conversation from experiment into a pragmatic conversation about bringing them into the future market infrastructure that is being set up. So, I mean, Singapore is just one example, and I made note of Japan, but there are other experiments that are going on, which are tantamount to being in a similar vein. And again, it kind of brings up the question around, are they going to go down the wholesale route in terms of their central bank digital currency, or whether they're going to take the retail option, and what the specific use cases are that really drive both of those in terms of progressive adoption from a payments perspective.
Sometimes it seems like there's more questions than answers as we find our way through this. So I wanted to go back to the line of conversation that Thomas had started about the role of exchanges in embracing this digital future. What is your take on that, Beng Hong?
Yeah, maybe I'll comment a bit about pandemic, and then I'll move on to what we are doing on our side. I would say that it feels that the digitalization, the broad digitalization that we have seen in the retail space, in the industrial space, seems to be finally hitting the financial sector. I would say that within the finance segment, we are full of legacy systems, different digitalization, but really unconnected. There's potential for us to redefine the base infrastructure, and then really I think beyond just thinking about the depository, how we settle, but really ultimately I think the promise is a full digitalized end-to-end process. And if there's one thing that has converted us in the last 18 months of COVID, is that we are more digitally connected. People are more comfortable with engaging, with communicating, with really transacting, right, in the digital manner. I think beyond the depository base, I think if you look at the electronic platform, trading platform, you have seen, I think, a significant adoption around the use of electronic platform. We have seen a significant acceleration in major buy side and sell side, all looking at how they reduce or rationalize the manual process that they have internally. And I would say that whole movement that is coming around digitalization set about, I think, a very fertile ground for us to rethink that if you're going to have everything that's digital, is there a better way that I can organize the process? Really, I think this flows very nicely on your question, around what exchanges are doing. And if you look at the core, we are the Singapore Exchange, and I think our business really is about working with our collective ecosystem of partners, the major sell side financial service provider, in creating the best of class service to serve, right, the broader ecosystem. So for us, I would say that again, there's a lot of development in the regulatory landscape. There's a lot more awareness and willingness to adopt. I would say the technology, I would say that has evolved to the stage that we can potentially better redefine. And I would say that the next step for us, or not only Exchange but broader community, is really to come together and work together to redefine how we can fit in to create a better service for our client. Which is why I think on Monday we made an announcement that we are partnering with 10 banks, a few Europeans, US, and regional banks, to collectively discuss, debate, and redefine what we think works for all of us involved. And we will welcome everyone to come in together, because I don't think that any one service provider will be able to then define how the future looks like. We collectively own this.
Great.
I think Peng Hong makes a very, very good point. And if I can just follow on from that, the thinking has accelerated given the sort of hiatus we've had over the past couple of years with the pandemic. And a lot of work has been done in the local markets. Where it's slower is in the implementation across markets. And of course, by definition, we're talking about partnerships and so on, not just within countries, but across borders. And certainly our experience has been that implementation is hampered by the fact that travel is still somewhat difficult, because the implementation just never moves as quickly as if you can get the people together in one room and start scribbling on the whiteboard. And in fact, this week we've got our partners here in Switzerland from Asia working through the implementation stuff for the digital exchange in Singapore. But this is the first opportunity we've had to actually sit together physically since November a year ago. You know, it's that is slowed down, and I think that's something that we've done a lot of preparatory work to get there, and now hopefully there's that light at the end of the tunnel with the various certificates and so on, that we can start getting staff in from different areas again, hiring cross-border and bringing them into a country and letting them get to work. You know, there's a whole series of difficulties associated with the travel restrictions. I'm hopeful that over the next 6 to 12 months that will somewhat normalize again. But the problem,
Thomas, this is the first trip I've been to London after 20 months. So exactly that.
It's that. You know?
Yeah, I'm envious. I haven't been able to get that far in my time. But that
May you won't be so happy if you know that I need to do 2 weeks quarantine. But
not
exactly. It's still different.
I've lived through that. That's it's not enviable at all.
That's right.
This is the thing, right? It's still difficult, but we've got to a point where I think all of us are more prepared to calculate that into our planning, because we've got to start moving forward on implementations.
Yeah, which is a good segue into you know, what, Thomas, what do you think is the role of asset managers and banks and asset owners to help drive this change, especially as we get out of this pandemic and we can move at a faster pace?
I think I'd turn it around. We've got to make them comfortable with our structures, and certainly in the dialogue we're having at the moment with pension funds, asset managers, insurance companies, and so on, they have a certain leeway to play, if you will, with alternative investments in this space, but it's very, very limited. Because the structures aren't yet ones that mimic something they're comfortable with, and they have to be careful. So with their fiduciary responsibilities, there is work for us to do together with custodian banks, together with liquidity providers, together with risk management tool providers and so on, to make them comfortable with the infrastructures that we're building. I think once that is in place and that level of comfort is there, from a regulatory point of view, we're getting there. There's a recognition as to what is being required, hence the crackdown we're seeing in recent weeks, and I think that will continue on some of the existing, in particular, cryptocurrency venues. I think that will continue. It will, in fact, probably accelerate over the next 6 to 8 months, for all the right reasons, that we then use those opportunities to say there are alternatives out there. And yes, they may not be as sexy as the long-term vision of a completely decentralized distributed model. We'll move towards that over time, but we've got to get comfortable with, you know, ownership stakes, right? A transfer of ownership, Is there an appropriate audit trail behind it? Have you got the risk management tools in place, and all of those things? And that's really incumbent upon us. If we want to utilize the benefits of digital assets in our own infrastructures and be more efficient and more effective in providing product into the market, then we also have to make it attractive enough for the investors to be comfortable investing in those products.
Yeah.
And there we still have a way to go.
Irfan, obviously, I'll let you also comment on that if you want, but also I'm curious if you could also give us your take on regulators and governments in Asia, whether they are driving the change or whether they're responding to demand.
Yeah, so maybe if I tack on to what Thomas was saying, and actually it pulls on a thread that he carefully laid out earlier on in terms of the providers that are currently in the digital asset space effectively having roots in retail, and that really not translating as well to the institutional side of the markets. So in terms of the way in which our traditional clients, so asset owners and asset managers, thinking about it and looking to us as service providers, they're really looking at seeing how we might be able to provide them a very similar experience in terms of what they have in traditional markets and what they're used to in terms of the robustness of the security that we're able to provide in traditional markets, and also the type of user experience that they get generally from dealing with institutional firms that have a longevity in this market overall. And so it's incumbent on us to really work together. And I'd say that there's been a lot of co-opetition in terms of working together through consortia. And again, we must remember that this is how the likes of CLS and SWIFT were all born. And they are now market utilities that have been long-standing and have done very good things in terms of progressing in the market. This is what we're starting to see. So a good example of that type of initiative would be the way in which State Street have been part of a group called Finality as a minority investor looking to create the digital market infrastructure that would support the transfer of security tokens by having a tokenized cash leg of that transaction. So those types of initiatives have really, I guess, accelerated over the past year and a half, 2 years, with the advent of everything that's been going on in the markets. But in terms of what we're seeing in terms of the governments and different jurisdictions around regulation and how they're looking at this type of space, an interesting point that we've perhaps not really enunciated yet is the partnership between private and public institutions, which we've touched upon, but I don't think we've really double-clicked on. We've seen very recently that central banks have been very open to working with private companies who have expertise in this space and are being quite happy to have those conversations in an open format, whether it be through issuing white papers or a consultation paper in which they have invited both the financial services community as well as fintechs that have progressed in terms of their solutions for the market and looking at how they might be able to push that agenda forward. So I'd say that in terms of the way in which governments and regulators are responding, yes, they are going relatively, as quickly as they possibly can, but we're all learning in this space. So it's not like every one of us has every single answer. A good example of that might be the way in which the Financial Stability Board was assessing the impacts of certain stable coins in the markets. And so these had, the advent of, say, for instance, Libra at the time, and now called Diem, had really kind of knocked on the door of central banks and governing authorities and policymakers around how they really should think about money. And that's extended to assets and markets as well. So at State Street, we've taken this into consideration, and with the advent of everything that's been going on, we've taken the step of actually creating a new division called State Street Digital, which is looking at central bank digital currency, tokenization, cryptocurrencies, and the underlying technology that supports all of that, blockchain. And I don't think that we're alone in that we're seeing other market participants in the same vein, looking at what this might mean, setting up the appropriate internal teams, and really mandating them with a view to kind of go out, lobby, but also work with regulatory bodies, ensuring that we all are moving forward in terms of setting the standards and the frameworks and guardrails for the market that is developing at the moment.
Terrific.
I think maybe following on from that,
yeah,
we will see over the next few years probably more formal partnerships between traditional market participants and infrastructure providers, because that line is blurring. And I think as exchange groups, that's a reality, and our value proposition needs also to be redefined in the same way that banks need to rethink what their value proposition is in a world where, frankly, you don't need a bank to make a payment anymore, really. And so some of those existing truisms and revenue streams go away, and you need to rethink what your strategy is. It's absolutely no different for us as stock exchange groups looking at, on the one hand, consolidation in the existing industry and dealing with that. And there's still a very, very significant business there that needs to be managed and moved forward. But bearing in mind that strategically over the long term, we will be looking at replacing big chunks of those infrastructures with a much, much, much more efficient structure, which binds in custodians and investment banks and other participants in the market. And those cooperations, competitions, both are going to develop over the next few years. Absolutely convinced of that.
I just want to take a moment to remind our audience to please, if you have questions for our panelists or speakers, please feel free to drop them in, and we will take them. Thomas, Irfan looked into his crystal ball earlier in our discussion. I wonder if you could look into yours and let us know what you think about how far away we are from a widely accessible central bank digital currency.
We'll see the first one. I mean, we've seen now already with China coming out. So it is gathering momentum. Again, I come back to my comments from before. It depends on the use case. I think we're talking months for CBDC, central bank money settlement of securities transactions, legitimate native digital securities. That won't take very long. I think in the trade finance space, it will also have adoption within the next year and a half, as soon as the CBDC is available. I think a wider use into the retail side, I couldn't even hazard a guess, because at the moment I'm struggling to see really what the benefit is.
Interesting.
At that retail level, I just don't see it yet, because making payments instantly with fiat currency on an electronic basis is a regular part of all of our daily lives. And do you get something better by having it now defined as CBDC? I don't actually see it. So I think it depends on the use case. I know certainly the Swiss National Bank is moving forward quite actively and aggressively. There are some other banks in the EU space that also are moving forward. How close they are to actually issuing CBDC, I'm not sure.
Okay.
But the moves are happening, and again, it'll come down to, is the use case there to really add value? And again, at the retail level, I'm not sure. But things like trade finance, I could see it going very quickly.
Peppered throughout all our discussion so far, you have all brought up technology in some form or aspect. Even the QR code, the lovely embrace QR code. I guess I'm curious: is technology keeping pace with the demand? Is it actually the driver of it? And is and is it helping to drive the solutions to the needs of the digital asset services that people are seeking? What do you think, Ben Hong?
Yeah, I would say that technology will continue to evolve, but I don't think that it is a constraint around what we can do. And as both Thomas and Irfan has mentioned, right, and even within SGX, we are all looking at new ways of how to apply. We all have our innovation team that looks at the latest in technology. I think if you look at the marketplace today, we all have our innovation, we all have our thoughts, we all have our legacy systems. We have worked, over the past few quarters and years with different partners. You go to one bank and they think that the DCM is a 500-step process per issuance. You go to another bank, it's 2,500, right? Steps. So really, I think the opportunity and something that Thomas briefly mentioned, right? What is the value proposition? And we can only determine that, right, by bringing together, right, the different partners to redefine, what that future of finance can be. And really, I think we need to take a holistic end-to-end approach around how we can better apply the technology. And on that, right, you cannot, again, make the decision on your own. You have to bring in, for example, a DCM process. You have to bring in the DCM bankers. You have to bring in the syndicate desk. You have to bring in the legal firms. You have to bring in, the issuers and the whole ecosystem to really redefine. And clearly, us as exchange and depository, we play a role because right now, all securities end in the depository, right? That we both run. So I would say that I think technology continues to evolve, but it's no longer, I would say, a constraint. It's really around adoption. It's really around coming out with new use cases, that makes it exciting and relevant. And we have to think about end-to-end holistic of what it can bring us.
And just adding to that, there are going to be applications where new technology and distributed ledger makes sense and others where it doesn't. And one of the things we're finding, and we're all learning through this, to Irfan's point from earlier, putting the blockchain in place is one thing. Optimizing it for similar levels of performance that we've all become accustomed to in the institutional space is a very different thing. And at the moment, we're not quite there yet.
Yeah.
And when I look at, for instance, the trading space and meeting the needs of high frequency traders, that is unlikely to happen on a distributed model because it's nonsensical, right? I mean, we're talking nanoseconds, co-location models, latency models. That in a distributed ledger space, at least from the point of view where we are right now, I don't see it happening because I don't see it meeting the needs of those high frequency traders. So you take that holistic view and then you say, okay, in which parts does it start to make sense? A distributed ledger model, which is primarily replacing a centralized model, but using traditional equities and fixed income securities, also has limitations, because unless you're linking it together with the ability to have a smart contract and intelligence imbued in the security, you limit how much you can actually do with that. And I think that's the experience, for instance, that our colleagues in Australia have found. The market is not thrilled about every single broker and bank having to invest a ton of money for using new technology to automate old processes. You really have to look at, can we make the entire end-to-end process more efficient, and where does it make sense? And so it's not a simple plug and play proposition at all, because the use cases for these small applications probably aren't there.
If I might build on that, in terms of, I'll put my old technologist hat back on at the very start of my career. Technology is often never a limiting factor in terms of looking at the way in which business ideas can develop. So if I speak to my technologists inside my firm, anything is possible. That's typically the line that's said. But we need resources, and we need to have a clear use case in terms of understanding what it is that you're actually trying to achieve. And with the advent of digital assets, and again, we've all touched on it today, it's a reimagination of financial markets. And that's not just taking a standalone process and digitizing it. That's looking at the entire value chain, understanding where there are key areas which might be cut out and made significantly shorter, and looking at the way in which different actors might play different roles in the future. And so going back to your original point, May, technology keeping pace, I think that it is, but I think that the use cases, and to Thomas's point, we're not suggesting blockchain for everything now. So we're taking a slightly more pragmatic approach as an industry as to what blockchain is, how it might be used, and what are the pragmatic steps in order to be able to implement those technology changes into our own infrastructures and environments that will be of benefit to the end user without adding cost and removing complexity from the environment. I think those are really practical things to think about, and it's just shown how the mindset has changed from industry participants as to how they approach this space and think about new and innovative and novel technologies such as DLT.
Yeah, and I think that when we're talking about new space and new areas we're diving into, I would think that there's always the flip side of the coin, which is new risks. And Irfan, I wonder if you could quickly address the issues of risks, and are there new risks that's come about as a result of digitalization in the financial systems that we're evolving into?
Yeah, sure. And I'm sure that Thomas and Beng Hong can actually speak significantly more, with significantly more authority around this, especially from the exchange point of view. But if we're to take an example of T-instant settlement of trading activity, are we really thinking this is going to be something that's desirable by the entire market, where they've been used to having a T+2 settlement cycle for a number of years? This brings in a potential issue around liquidity and having that liquidity available to be able to settle transactions. Now, the idea of stablecoins is I would say not old hat, because the industry at large, and since the advent of the white paper about 12 years ago around Bitcoin, it's not what I consider to be new, but these are still practical, pragmatic questions that the market needs to answer as to whether this is something that they would like as a desirable end state. You could say on the one hand that it makes credit significantly more efficient, or cash more efficient, in that you don't have this idle cash lying around. But equally, there might be benefits to having the time to settle transactions in today's markets. And again, I would welcome Thomas and Beng Hong to chime in as to what they see from an exchange perspective as to how this is going to be perceived in the market from the clients that they work day in, day out with around this particular issue.
Maybe I can just jump straight in there,
Right.
And then let Beng Hong give his view. I think what the model we see at the moment in the cryptocurrency space is a pre-funding model, and for the retail market, people seem to be fairly comfortable transferring not insignificant amounts of money to banks they've never heard of before, and then buying their cryptocurrencies with it. In the institutional space, it just does not work. We're in the position today. Even 5 years ago, we could have gone to T-instant without any trouble whatsoever. You flip the switch on the Friday, by Monday morning, you're in a T-instant environment. Easy. The problem is you reduce a very small operational risk with T+2 with a very large credit risk. on the liquidity side, as Irfan has said. And we've built the digital exchange here in Switzerland to be able to have T+X settlement, because there is a value in having a netting function in between. Whether you make it a central counterparty or whether you just have a netting engine below that, we're using the netting engine, which we will optimize and be able to do on the fly, and that will presumably bring in the settlement period. But T-instant in an institutional environment is unrealistic. You know, there aren't any banks that work that way, that can manage their treasuries that way, without a very, very significant reduction in their liquidity and in their trading activities. And that's a challenge. And that one doesn't go away. Right? I think we can optimize it very substantially. I know at the moment there's a movement in the United States to go to T+1 settlement that's being examined. I'll be very interested to see how the consultations work out, because my experience with that market and with asset managers and fund managers and brokers is they're struggling at times with T+2, how they're going to do T+1, even in the old world with established practices, is going to be an interesting one to see how they're going to get there.
Yeah. I don't know, Ben Hong, if you had anything to add to that, but I was hoping also,
No, Ben, please continue. Sorry.
Oh, no, I was hoping you could also help us wrap it up with just by giving us your thoughts about the overriding benefits to the region's financial system if we were to fully embrace digital there.
Maybe to continue, I think that discussion of on risk, I think totally agree to that, right? Atomic settlement and the whole promise of it, you can do it, but have you really think about the associated risks, right? And benefit of that. And if you look at today, you can match in microseconds. You can have price discovery in microsecond. You know that you will own the asset. The settlement takes place T+1, T+2, but really, does it really change your life, right? And what is the difference between T+0, T+1? So I would say that I think we need to have some thought through around that. Again, the debate around the futures of finance, centralized against decentralized. And the broader question around if it's decentralized, who is going to set the market rules if you want an exception handled, right? So what's the framework of that? So you transact in one place, and who is going to be the central authority, and the legal regulatory infrastructure that's around that. So there will be, I think, a fair bit of that evolution that will be very exciting. In terms of the benefit, I think clearly, if you look at Asia Pacific, we are a very diverse region, very developed area, very big countries, and less developed areas. And you have a whole spectrum of people with levels of GDP. And I would say that I think one massive benefit, I think, apart from improving efficiency, reducing the cost for people to access, cutting down the layers, is really financial inclusion. I think on the one side, looking at new ways where companies and borrowers who needs to access the capital market can find easier access, into funding, and really, having a wider range of financial service, that they can consume, and really on the other side, right, for the normal retail investor, right, a broader range of asset that they can deploy, their investment into. So I would say that today we pretty much have a B2B to B2B to B2C, right? So massive layers of financial service provider. And I would say that, I worked in a bank before. There are some services that I would rather have it automated, right? So maybe the right model is a B2B to C and not a B2B to B2B to C, right? So can we make it a lot more efficient, reduce the cost, improve the transparency, reduce the systemic risk, and improve the financial inclusion, right? And having access to a broader groups of users that otherwise, the 10-90 rule, 80-20 rule, financial institutions have been focusing on bigger clients. How can we reset so that, we have a wider community being able to access the financial infrastructure?
I think that's a great way to wrap up this discussion. I really wish we had at least another hour to continue this discussion. In some ways, I feel like we just got started because there's so many issues and questions raised. And there's so much ground to cover and so many changes happening so rapidly. But my sincere thanks to Irfan, Ben Hong, and Thomas for their time today and participating in this illuminating conversation. I also want to thank our audience for joining this discussion today. In addition, I want to thank Stix for its partnership with FN Custom Studios, making it possible for us to bring this dynamic series of conversations to you all. Just as a reminder, there are 2 more in this series of our 4 discussions on the future of exchanges, exploring the changing roles of trading venues in various geographical areas. The next one we'll take a look at the ecosystem in Latin America. So stay tuned for details about that event, which will take place later on this year. I have no doubt that discussion will be just as engaging and insightful as this one. So I'm personally looking forward to it, and I hope you will all be able to join us for that as well. But until then, please be safe and be well. Bye-bye.